Rick Santelli is standing by at the CME in Chicago. And Rick, we've been awaiting these numbers. Take it away.
Yes, we're waiting, obviously, retail sales. We also have Empire Manufacturing. On retail sales, do remember, last month was on the weak side. Here we go. Our February read, this is the advance on retail sales, up 0.2 on headline. That's a real disappointment, up 0.2. Now, it is the best of the year because we haven't had a positive number, as I referenced. We were down 0.9 in January. That was the worst, basically, in close to 2 years. You have to go back to March of 23 to find a more negative month-over-month change. Many were expecting a better bounce. And if we look at X-Auto, hold on. Minus 0.9 now becomes minus 1.2, which equals where we were in November of 22. To find a bigger negative month-over-month change, you're in July of 21. Now, let's strip out autos, up 0.3. That's a pretty good number. That's about what we were expecting, up 0.3. And last month's minus 0.4 now becomes minus 0.6. Minus 0.6 would equal Jan of 24 to find a bigger negative. You're in March of 23. So rear view mirror, really nasty numbers. Bounce back is not as much as many would have thought. Let's look at X-Autos and gas. We continue to improve, up 0.5%. This is the first number that actually bests expectations. My numbers were looking for up 0.4. In the rearview mirror, also a bigger negative. Minus 0.5% becomes now minus 0.8. Minus 0.8 in the rearview mirror, with the worst going back to March of 23. And if I look at up 0.5%, that equals where we were in December. To find a better number, you're going to June of 24. So that's a pretty good number. And finally, let's look at Control Group, which is the core retail sales. And this is actually a good positive. Watch rates go up on the core, up 1%. That's 2.5 times the 0.4 we were expecting. And in the rearview mirror, a bigger negative revision. But looking at the bounce, it negates it. We went from minus 0.8 to minus 1%. Now we're at positive 1%. I also referenced we had Empire Manufacturing. I like this one because it's a March number. Minus 20. I was looking for minus 2, maybe minus 3. Minus 20 would be the worst month-over-month change since January of 24. That's a little less than a year. Interest rates went up a little bit on the better control number. They came down a bit, so we're at 4.30 in a 10-year. That's about down 1 basis point. That's a couple basis points better than it was before the number. And you are seeing just a smidge of a better scenario in the pre-opening equities, at least as evidenced by Dow futures. And I do want to point out one thing that Mike Santoli pointed earlier. If you looked at the savings rate and the personal income data we recently received, it was the best since June of 24. Okay, so mid-year last year. So we do have some dry powder there. It looks like in some ways it was put to work, but I would say that in the months ahead, there's a possibility that we could kind of boost some of those numbers a little bit higher. Back to you, Becky and Joe, and happy St. Paddy's Day.